Hi, my name is Jay Krushell. I'm the Chief Legal Officer of Treefort Technologies. We are a digital ID company operating primarily in the legal space. But today I'm not going to present on what our company does. I'm going to talk about recent developments in the legal space. And normally, talking about lawyers and what's happening in the legal ecosystem is boring because it's not much going on, but these days there's some very dramatic and dynamic and I think interesting things happening. So during my presentation, I'm going to start off by talking about the frauds, title fraud and mortgage fraud that have been happening. I'm going to talk about how each of the players in the legal ecosystem are reacting to those frauds. Talk a little bit about what we think the specific problem is and what a potential solution to that problem it might be. And then afterwards, we can have a discussion and I can get your input. For Western financial systems, that's out of those standards, we got FINTRAC. FINTRAC, of course, sets rules for client ID for reporting entities. What happened was, I think it was about 2005, 2008, the FATF folks came to Canada and sort of did an audit on how Canada was doing with complying with the FATF requirements. And Canada actually got a failing grade. And the real reason they got a failing grade is because most transactions in Canada, when it comes to real estate or business, go through lawyers' trust accounts. And lawyers are not reporting entities under FINTRAC. So the international auditor said, hey, feds, you need to do something about this because you don't have line of sight on that money. So what the feds did is they tried to amend the FINTRAC rules to add lawyers as reporting entities. And the law societies challenged that. And what happened was it went to the Supreme Court, and in 2015, the Supreme Court sided with the law societies saying, federal government, you can't do that because it's a fundamental breach of solicitor-client privilege. But the people I've talked to who were involved in that process said, okay, listen, first of all, we're all on the same team here. We want to stop the bad guys. Second of all, they knew that the federal government was going to have to come back at this another way because of these international obligations. So what the law societies did is they said, listen, feds, here's what we're going to do. You know those FINTRAC rules? We're going to impose the exact same rules on lawyers so that you know that they're held to the same standard, but you don't get to look at the trust account. So that's where we're at today. So I, as a lawyer in Alberta, have to do the same client ID rules as a FINTRAC, a reporting entity under the FINTRAC rules. Now, the reason this is important is because what happened at COVID is as you'll know, before COVID, it was strictly prohibited to verify the identity of a person by having them hold up the driver's license to a webcam, because it's the worst possible way you can verify someone's identity. But when COVID hit, everybody was struggling, in a course of 24 hours to figure out how to keep the economy moving. So the Law Society said, okay, here's what we're going to do. We'll allow you to do that. Verify the identity of your client by holding up a driver's license to a webcam on a temporary basis. And in my view, that change is what led to the villain of our piece, coming back to our movie analogy. By allowing that digital workflow, it opened the door a little bit wider. It created an opportunity for the fraudsters to come in. And I think, this is my perspective, that's why you're seeing in the news more cases of the mortgage fraud and, of course, the title frauds. I know that the people on this call will know a lot more about these incidents than I will. The John Ryders of the world, of course, know a lot more. But again, that's kind of the background from the legal perspective, because these transactions, again, are all going through lawyers' offices. The lawyers are getting duped along as everybody else, and all it's taking is a fake ID. This case right here is an interesting one. 23-year-old kid connected with organized crime, had a organized crime level fake ID, a driver's license. He tricked the people into thinking he was a mortgage broker and the owners of properties. He did a bunch of transactions and he walked away with $7.3 million. And so that's how sophisticated these guys are. And that's how technically easy it is for these guys to create these frauds. So now, villain of our piece, we've got the bad guys. Now we go to the actors, one of the main players. And so if you imagine a movie poster, you know how the most famous actor has got the name at the top? Well, the title insurers are the Tom Cruise of our piece. They are at the top of the bill with the biggest letters because, as I'm sure everyone on this call knows, that one of the things that title insurance covers is fraud. And so if you have a title insurance policy for a lender and a purchaser on a property, real estate purchase in Toronto, in Ontario, there was likely going to be a title insurance policy. And if there's a fraud, it's the title insurance companies that are writing the checks. And because of that, the title insurance companies are most active. You've probably seen John's name in the news lately. And then this headline, I think, is indicative of why it's so important, because it's saying the future of title insurance could be at risk if the real estate fraud trend continues. So out of all of the players in our drama, the title insurance companies are the ones that are most motivated to take action to stop the fraud. And they're the ones that are out there. By way of example, this is a notice, or a portion of a notice that Stewart Title sent out about a year ago. They were out of the gates, the first ones to say, listen, this is such a big problem. We're simply not going to insure these risky transactions anymore. And from my perspective, this sent a bit of a shockwave through the sector, because it's basically one of the title insurance companies saying, yeah, we've had enough. This is too risky for us. So we're out with respect to this segment. And so again, this is real. The title insurance companies aren't kidding when, at least my perspective is that they're not kidding when they say that this is a serious problem that needs to be addressed. So then we come to another one of the main players, and you might be, people on this call, if you're not familiar with how the title or the land titles offices work, you might be surprised that I've given second billing to the land titles offices. But the reason is, again, the land titles offices also have an insurance product that they refer to as an assurance fund. And so that fund is there if there's a wrongful transfer of a title, and to compensate people for damages. And usually a wrongful transfer of title can happen one of two ways. Either the land titles office just makes a mistake. They punch in a number wrong, and transfer a property that shouldn't have been transferred, or there's a fraud. So in Alberta, if somebody were to do a vendor impersonation fraud, and there was not a title insurance policy, that person could make a claim against the Land Titles Office of Alberta's assurance fund. Now, the reason, again, how the title insurance companies kick in is that you can't make a claim against an assurance fund if you have other insurance protection, and there's no subrogated right to make a claim. So what that means is if there's a transaction and there's a title insurance policy and there's a loss because of a fraud, you have to make the claim against the title insurance policy and not against the assurance fund. So because of that, the title insurance companies are really acting as a firewall protecting the land titles offices. And when I'm talking to the land titles people in Alberta and BC and Ontario, they have all told me that they are sitting up and paying very apt attention to what's going on here, because if the title insurance companies were to change their coverages or stop insuring against the fraud, that opens up the possibility that these claims can be made against their funds. And from all the information I have available to me, they're not prepared for that. They don't have the resources allocated, and they actually don't want to incur that liability. So they are a main player in this drama as well. This next one. So this is, again, what I want to spend a bit of time on. The fellow whose picture is there is kind of the Nicolas Cage of our piece, a lawyer by the name of Michael Lesage, if I have his name right. So what happened was, going back to the beginning of the story where I said that the land titles office or the law societies put in that temporary relaxation of the rules. Well, what happened was, in September of this year, the Law Society of Ontario sent out a notice to the profession saying, okay, listen, we are going to rescind that temporary relaxation effective January 1st, 2023. And the reason why this is so important for the law societies is, again, coming back to that piece where I talked about FinTrack, the law societies want to make sure that their rules governing lawyers mirror the FinTrack rules. FinTrack revoked that temporary relaxation. I think it was in May last year. So effective in May, reporting entities could not verify the identity of their clients by having them hold up a driver's license to a webcam. So the Law Society of Ontario wanted to make the same change, but as soon as they sent out that notice, all hell broke loose. And there's a couple of different reasons for that. But one of the main reasons, in my view, is that some of these law firms in Ontario, these big residential real estate firms like the Diamond and Diamonds and the Anderson Sinclairs, have really built a business model around these digital workflows. Because again, if their office is in Mississauga, but they can do a digital workflow, meeting with people to sign documents, they can deal with people in Northern Ontario or Ottawa or Thunder Bay. They can really expand their base, and they've really acted on this. They've built their systems and business models around these digital workflows. So when the Law Society comes along and says, well, we have to go back to our normal rules, they freaked out, and that's not an understatement. And so this fellow led the charge, and there was such an uprising that the Law Society of Ontario had to back off and revoke the removal of the temporary relaxation, and they postponed it to January 1st, 2024. What this means is for the next year, that window that I talked about, that door being open for the fraudsters, continues to be open. And what's happening across the rest of the country, all the law societies across the country are watching to see what happens in Ontario. So really, again, in Ontario, it's stalled on the law society side. Then we get to real estate agents. And of course, I know most of the people on this call will be familiar with these articles. A couple about the vendor impersonation frauds. There was some, I think, criticism about real estate agents who handled those transactions not doing enough to verify the identity of the people they were dealing with. And the reality is, how this all works is mortgage brokers, lenders, real estate agents really are relying on the lawyers to verify identity. It all gets passed off to the lawyers. And so it's not a criticism of the real estate agents. I think it's more of a statement of fact to say, yeah, they probably didn't do much. They were relying on the lawyers to do it. But because the lawyers can verify their identity by looking at a driver's license over a webcam, that's how these people are getting through the system. The next player in our piece is the mortgage brokers. And this is a snippet coming out of the Cohen Commission report where Justice Cohen made some, I think, quite critical comments about mortgage brokers and the mortgage brokerage industry and the steps that they were taking or not taking to stop money laundering. And I think Dean mentioned that earlier, that legislation and that's happening in BC, there's reaction to this, but it was clear in the report that there was an expectation or a finding that the mortgage brokers weren't doing their share to help stop this problem, and that change needed to happen. Now, don't boo me when you see this next slide. So the lenders in this scenario, what I'm meaning by this slide is basically saying, again, in my 23 years acting as a lawyer, I acted for banks. That's what I did. And on every single one of those transactions, what they would do is they would send me a form and say, Jay, you verify the identity of the client, fill out our form, get the ID, and report it back to us. They all downloaded the responsibility for verifying the identity of the individuals to the lawyers. And so when I say that the lenders are saying it's not my fault, they're saying, yeah, we hired people to do this for us. And so all of this, so this is the drama. These are the players in our piece. These are the actors in our play. So what's the problem? We had a call about a year ago, and I know John Ryder was on the call, with the Toronto Police Force Financial Crimes Unit. They brought the people together, some lenders and title insurance companies and lawyers, and I was on the call. And what I remember from the call was a couple of very what I thought were interesting statements. First of all, what they said is that policing is not a solution to this problem. They don't have the resources. They can't go and shut people down in Costa Rica and Venezuela and Argentina. They said, we can't do it. So to put all your eggs in the policing basket, that's not going to stop the problem. What they said was that the biggest part of the problem is that everybody in our ecosystem, mortgage brokers, lenders, lawyers, notaries, title insurance companies, land titles office, provincial government, is an island. Everybody's doing their own thing. Nobody's connected. Nobody's working together. Nobody's sharing information. So they said that the biggest problem is with these silos, so that the gaps in the screen here, those little white spaces, the fraudsters can move in between them to get to the other side. They said what needs to happen is, the recommendation was that everybody in the ecosystem needs to start working together. And Dean, this brings me to my last slide. This is the solution that I proposed to the group, is that in order to stop the frauds and the cost that's happening to the entire ecosystem and the possibility of the title insurance companies not insuring, the effect that it would have on private lenders and on potentially land titles offices, is there needs to be mechanisms in place where everybody in the ecosystem is working together. Now, of course, we have to respect privacy. Of course, there's security concerns. Of course, there's also business competition elements here. Fully recognize that. But what I propose to the group, and then I'll be quiet and leave it for discussion, is that in my view, the ideal workflow would be that the mortgage brokers, because they're usually the first point in contact in these transactions, are the ones who would do the robust ID verifications. And then what will happen then is that will deflect a lot of bad guys out of the system because they won't be able to get through. Then what the mortgage brokers would do with those robust IDVs is they can share them with the lender. And then once the loan is approved, they can share it with the real estate agent. And then once an offer is unconditional, they can share it with the lawyer or the notary. And then at the appropriate time, the lawyer or notary can share it with the title insurance company. There's ways to do it if people want to get into the tech on how this is done and how it works. But in my view, that's what needs to happen. So the elements here, again, are sharing of information and robust IDV. So Dean, I think that's about the end of the presentation. And I see John's got his hand up, so maybe I'll just be quiet and hand it over to you guys.